Yet again, another IPO hits the market, this one being Garuda Construction and Engineers Limited. In this video, we will cover the business overview, IPO details, the market opportunity, followed by the company's financials, peer analysis, and lastly, the valuation. So let's begin. To start off, as the name suggests, Garuda Construction and Engineering provide end-to-end civil construction services for residential, commercial, infrastructure, and industrial projects. The company also provides services such as operation and maintenance and mechanical, electrical, and plumbing services, as well as finishing works as part of the construction services. Hence, under the banner, they provide comprehensive construction services. Now, if you look at the image on the screen, Garuda has completed projects across different segments, but a majority towards residential. The upcoming projects are also aligned towards residential projects amounting to 46%. Currently, Garuda's order book consists of 12 ongoing projects estimated to be around 1,408.27 crores. Now moving on to the IPO details. Garuda Construction opens for subscription on October 8th and is open up until October 10th and is set to list both on the BSE and NSE. It has fixed the upper price band at 95 rupees per share. So for a retail investor, the minimum lot size would be 157 shares, translating to a minimum investment of 14,915 rupees. Garuda plans to raise about 264 crores, out of which 66% is towards a fresh issue of 173.85 crores, while the remaining is an offer for sale, which means the existing promoters and shareholders are selling off shares. The IPO has reserved 35% for retail investors. So what are the objectives of the issue? Garuda plans to use the net proceeds from the fresh issue to achieve a couple of key objectives. Firstly, to fund its working capital requirements. Second is for general corporate purposes. And third is to fund inorganic growth through mergers and acquisitions. Now, what about market opportunity and the future trend of the industry? The construction sector is the country's second largest economic segment after agriculture. The sector has contributed about 10% to the national GVA at constant prices in the first quarter of fiscal year 25. However, the order book of the construction companies is dependent upon the capital expenditure in the economy, and the investments can be classified into infrastructure, real estate, and industrial construction. Additionally, the gross fixed capital formation or GFCF component, which is a measure of the net increase in physical assets like building, roads, bridges, and other infrastructure projects, has witnessed an improvement across the years. Continuing in its growth trend, this ratio has reached 34.9% in fiscal year 24 and is set to increase further due to the initiatives such as Atmanirbhar Bharat, Make in India, and production-linked incentive scheme. Now, overall, the Indian construction sector has grown at a CAGR of 10.6% from fiscal year 18 to fiscal year 23 to rupees 3,922 billion. The construction sector is further expected to grow to rupees 6,494 billion in fiscal year 30 at a CAGR of 7.5%. Now, coming to the financials of Garuda, it has demonstrated revenue growth over the past few years, driven by a strong pipeline of projects and effective execution. Despite the drop in revenues by 4% in fiscal year 24 to 154 crores from 160.6 crores, it has witnessed a CAGR growth of 30% over the last 3 years. EBITDA margins as well have been consistently over the 30% mark, showing good operational efficiency. Now looking at the bottom line, the company delivered profits of 36.4 crores in fiscal year 24. This decline from the previous year was due to the drop in revenue from operations, but more importantly, a severe increase of 76% in employee salaries and benefits. Profit after tax margins also remained healthy above the 20% mark. Now looking at the return ratios, the company delivered impressive return ratios. Return on equity stood at 36%, while return on capital employed stood at 46.6% as of fiscal year 24. One of the highlights is that the company is virtually debt-free. Garuda has reduced debt significantly, and an increase in shareholders' equity has led to the decline in debt to equity ratio from 0 to 3 times to no debt as of fiscal year 24. Now moving on to pure comparison and valuation. The image on the screen shows Garuda compared with its peers. Now, while Garuda seems the smallest company in terms of revenue, with 154 crores of revenue from operations, it has the most superior ratios compared to its competitors. Garuda has the highest EBITDA margins of 32.4%, followed by the highest profit after tax margin of 23.63%. Even the return ratios of both ROE and ROCE are the highest for Garuda. One of the main highlights for Garuda is that it has nil borrowings, as there are no loans, and also a lower depreciation due to its light fixed asset inventory as compared to its peers. Okay, now talking about the valuation. With an upper price band of 95 rupees per share, the price to earning ratio stands at 19.5 times, while the industry average stands at 27.58 times. So as per the industry average, Garuda is reasonably priced. Now coming to our last segment, which is strength and weaknesses. Let's start with the strengths first. Garuda has a proven track record of successfully delivering large-scale construction projects, demonstrating its expertise and capabilities. Secondly, as discussed earlier, Garuda has displayed a strong financial position, including a healthy balance sheet and consistent profitability. Furthermore, it has virtually no debt, exhibiting superior ratios compared to its peers. Now, in the construction industry, an order book is considered one of the key indicators of future performance, as it represents a portion of anticipated future revenue. And Garuda's ongoing and upcoming projects amounted to a total of 1,408 crores. Now talking about weaknesses, the construction industry is highly competitive with numerous players vying for a market share. Garuda must continuously differentiate itself to maintain a competitive edge. A major portion of Garuda's revenue comes from its top 5 clients. And if you look, the top 10 largest clients accounted for approximately 100% of the revenues from operations. The loss of a significant client or clients would have a material adverse effect on their financial results. Now, Garuda, being a construction company, are dependent on a reliable supply chain for materials and equipment. Apart from that, even attracting and retaining skilled labor poses challenges. Disruptions in the supply chain and shortages in labor can lead to delays, increased costs, and project timelines. Lastly, the construction industry is sensitive to economic cycles. A slowdown in economic activity can lead to reduced demand for construction projects, affecting Garuda's revenue and profitability. Now that you have a comprehensive understanding of the IPO, make an informed decision. Having said that, this is me, Ralston, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.